Hey, hello everyone. I hope you are all doing fantastic. So today we are doing the technical analysis outlook for the week starting 12th of May 2025. So, today the setup is a little bit different. You won't see my face because I'm traveling Europe. I just returned from the Energy Exchanges conference where I was giving a little talk on the importance of technical analysis. That is me, and Clever Markets was also a business partner. Very proud of that. It's the first time. So, all of you are taking part of the history of Clever Markets. I'm very, very proud of that. Uh, for me personally, was a big step. Loved it. Okay, so today it is all about the European energy markets, and this is the results that we had this weekend. So you can see on the TTF front month, we every week we are asking. The Clever Markets and my personal network, where they think the TTF will be going next week. And you can see from a bearish dominance from last Monday, it's now more evenly split. I mean, reasonably evenly split. The share of those people who are indecisive has decreased. But with simply the powers being a little bit more balanced, that means that half of the market is going to be wrong. So if we start moving further into a direction, bullish or bearish, up or down, that means that half of the market is going to be wrong. So there will have to be a lot of covering, short or long. So we will have a look at what that means for the markets, well, right now. So let me go to the next slide. There you go. Let me move everything around. I'm on a small screen this week. Okay, cool. So let's have a look at this. On the TTF front month, on the NBP front month, TTF and NBP front season, EUAs, German Power, Henry Hub, and Brent. So for all these markets, we saw that last week we have pushed higher. You can see that, but zooming out, for all these markets, we are still in an underlying downtrend. So you can see, like, going back to like March 25 and beyond, we have been making a flow of lower lows and lower highs. And now we are almost on some markets reaching the peaks that we had in mid-April. So this is quite significant because now the question is, are we going to top out here? Because if we continue higher, then we will really turn midterm bullish. So at least on the daily chart, right? Short to midterm. However, on the EUAs and on the German power markets, we are already past it. You can see we already have switched towards a flow of higher highs and higher lows. So this is quite interesting, this discrepancy between the gas markets and the power markets and EUAs. So this is important. Because usually these markets are moving in tandem, more or less. It's very interesting to see that German power and EUAs are now the front runners. However, last week, all of these markets have seemingly topped out at important resistance levels. So for this, I want to go into a little bit more detail. So on the TTF front month, I'm just moving into the daily chart already. So this is what we had, how we ended last week on a Friday. So you can see, as long as we are within the channel, the market is bearish. So that is unquestioned, right? So we do have the flow of lower lows and lower highs. Of course, this up leg here was best traded on the hourly chart. We'll talk about that in a moment. But in a grand scheme of things, we are below the 200-day exponential moving average. We are within the channel. We are still making, I mean, now we are reaching it, but until recently, we still made lower lows and lower highs. So what's next? I want to point your attention towards the 36.3 level, 35, so 36 essentially. That's the important level to watch out for, because this does align with the most recent peak. It also aligns with this channel boundary here. So a move above that would be really significant for the bulls. But last week we had we had a dark cloud cover candlestick pattern. So which simply means we have a green candle and then we open higher, but we undo more than half of the green candles, so the midpoint of the green candle. So this means that this is usually a bearish reversal signal. Now the next question is, okay, we don't really want to take the signals on them alone. We always want to have some sort of confirmation. So here we see that the stochastic has topped out. So it's not as much of a clear-cut signal as I like to see it, but I think it's good enough. So now, if you want to turn this into like a real bearish signal, we would have to wait for a daily close below this trough here at 34.02, because then we would have the bearish candle setup confirmed, the bearish dark cloud cover, and we would then continue lower. The first point of call would be the 31.29, which is this trough here as well, so very important. And as soon as we start pushing below that, then the bears will simply continue. But for now, I think the bears have a good chance. Everything is really nicely set up. If we were to push above 30, well, let's call it 36, then the bulls will be given a chance towards the 200-day exponential moving average just above 40, like 42. Now, on the hourly chart, I want to show you this. So here you can see on the hourly chart, we are within the ascending channel. So this has dominated last week's gains for the longest time. And you can see that the market has been flowing within that really nicely. Last week ended with a hammer, so it's usually a bullish candle, but the bulls didn't pull through, and we had a little bit of a spinning top candle pattern happening here, both on high volume, so the market is really looking at it, but this here would usually lead to a bounce. But what are the tools saying? Is the stochastic giving us a confirmation? No, you can see we are still moving into oversold territory, so the bears are still in charge, essentially. So no bullish signal here. Also, we see that the momentum has been declining quite a bit. So this both increases the chances of the bears pushing below the channel this morning, on Monday morning. So overall, that's why rather bearish. I think that's a good chance that we will continue lower. And you can see we have here S1, R1, support 1 and R1. We have marked out this hammer candle. If we push above it, then our bearish assessment would be wrong and we would continue swinging within the channel. If we are right about this whole bullish setup not working out, then we would know that past 34.3, which would mean below the hammer, below the channel, the bears continue. I think that's most likely. All right, on the TTF front season, here we already did break above the channel, but only marginally so. And you can see here, I'm just referencing this old peak. We just made it barely above it. Let me just put this here in again. There you go, right? So we barely pushed past it, but not really. So that's why it is not really broken yet, I want to say. No higher highs yet. The bears are having a little break, but the bulls are definitely not in charge. So then I'm looking at the stochastic here once again. We have topped out. We moved into overbought territory. We moved below it again. So this is for me the bearish signal together with the dark cloud cover candle pattern here. So you can see once again here I am putting my support 1 level here. So if we break below that, the bearish setup would be confirmed and we would continue lower towards 32.37 at least. On the German power market, we see the same on the daily chart. We pushed just above the 200-day exponential moving average. Very important resistance level, psychologically important. And you can see it kind of coincides with this peak here, more or less. They can see we didn't really get a close above it. Just beyond this, we have the, what is this? Where is this? 89.49. You can see we have this peak here, right? So it's all accumulating in this one really important area. We did have a bearish engulfing and we are now pushing lower. Now here once again, the bearish confirmation signal would be below 85.86. I do see that happening for this bearish engulfing. We had a shooting star just before this on Thursday. So this rather to me looks bearish. So how bearish am I? We did see that the stochastic did peak out in overbought territory. I think there's a chance for us to close below 80, which means out of overbought territory. And then we would get a clear bearish signal, which should coincide with a daily close below this bearish engulfing. And then we just continue lower. So you can see I did put in these fib retracement, 0 up here, 100 down there, the 80 mark here, very important, psychologically important. So how low can it go? Well, we have a really good correction going on. If we do get a daily close below the 80, 38.2% fib retracement. I think the 61.8% fib retracement at 82.74 would be an easy win for the Bears. That I do see that happening. But how far we can really go is best observed on the hourly chart. Here we are a little bit more advanced than on the TTF charts because here we are past the channel already and we are making lower lows and lower highs. So here we are working with the fibs. Yes, we did mark out this hammer here. Hammer, once again, usually sets the market up for a bounce, and we would get a bullish confirmation above 86.5, so above the hammer. And we would, this bullish setup would be undone below 85.86. For now, you can see my preferred scenario is still bearish because the stochastic, yes, we did get a bullish signal here, but overall we didn't get a bullish close quite yet. Even, to be honest, even with the marginal close higher, I still think that the Bears will win out because look at this, the momentum is down. We did get a bearish, no, a death cross on the 8 and 12 exponential moving average. So I think it's all looking rather bearish. Okay, EUAs. What's happening here? On the EUA side, no, that's the hourly chart. Give me the daily chart. There you go. We have pushed past the descending channel. We are near this old peak, right? You have the 200-day exponential moving average, this peak, so it's all accumulating here. There's a good chance for us to push higher. Why is that? Look at this. The momentum is bullish. We got a golden cross on the 8 and 12 exponential moving average a few sessions ago. What is the stochastic telling us? Yeah, we did top out, but we are still kinda above the 80. So even if scenario 2 plays out, I still think that overall we could make it past 200-day exponential moving average above 71.36. Now, for this, I want to keep an eye on the hourly chart, definitely. So here you can see we are within the ascending channel. And even if we were to push all the way towards, I don't know, what is it, 67, 68, yeah, and we would still remain within this ascending channel. So we could be we could stomach a deeper correction and the bulls could still come out of on top eventually, which coincides with what's happening on the daily chart, right? Yes, we could get a correction lower, but as long as we bottom out above 64.4, the 61.8% fib retracement, we could still continue higher eventually. And the last market I want to look at today, this morning, very, very quickly, is Brent. So on the daily chart, the flow of lower lows and lower highs is maintained. Right now, we have been correcting higher last week, which is like putting the downtrend on hold. But ultimately, can you see we're just here? The most recent peak is there, which is also this very important 68, 70 resistance area, which used to be support. So overall, we could approach it and then slide along it, maybe. I think this level could hold. If not that, the bears have a good chance at continuing. So which way will it go this morning? For that, I'm looking at the fib retracements that I put on the hourly chart. You can see 0 up here, 100 down there. We are still above the 38.2% fib retracement. So this held really nicely, boom, and now we're pushing higher. And as long as we are within this, it's just a shallow correction. I still think ultimately we can continue higher. And look at this, the stochastic bottomed out in neutral territory. The MACD, so the momentum is still making kind of, no, okay, hold on. We have topped out here. So the momentum is kind of stable. It has come off more recently. So there's a little bit something to worry about because we are not really making new advancements here. So my eyes go to the 63, below that, deeper correction before we continue higher, or above 64.33, we'll simply continue higher. I hope you found this useful, everyone. Have a good start into the week and see you again on Wednesday. Everyone, have a good start into the week. Bye bye.